My other title was often wrong, never in doubt. So I never wavered. But look, I was completely wrong about competition. I actually thought we'd get Disney Plus in 2012, and it took them 7 more years before they launched. I was completely wrong that Netflix ended up being very good at creating content. I didn't think they'd be able to. And I certainly didn't anticipate a global international launch, all at once in 2013. Those are the things that drove the stock higher. I've been right for a long time that their earnings kind of misstate what their cash flow generation is. They're making $11 a share or something. It's $4 or $5 billion. They barely have positive cash flow, and they might do $1 billion this year. So I think that investors need to actually look at that content amortization. It's been very clear to me that they're on a hamster wheel of content spend, and so I've been pretty steadfast. My target's gone up for sure as they've grown much faster than I expected, but it's true. And I actually use a cash flow multiple. The stock hit my price target. I have to be intellectually honest and say, okay, enough is enough. They're where I thought they were worth, and that's a neutral. So that's really the basis for the downgrade. I don't see these guys as a high growth, high profit company. I see them as a low growth, extremely high profit company going forward. And you're going to pay a normal multiple 20, 30 times, but not 50, 60 times.
Yeah, and we're looking now in the low 30s, perhaps multiple, I guess, if you want to do it on earnings. So what about this idea right now, and it's been kind of capturing a lot of the debate around the stock over the potential for an advertising-supported tier on Netflix. You've had some executives that have not dismissed it out of hand recently. Would that matter to the stock?
I think it'd help. And, Reed Hastings is the proverbial emperor. They all do exactly what he tells them to, and every once in a while he's naked and they tell him how great his outfit looks. He's the guy who's been adamant for 20 years, 15 years, that they dump all content at once and let everybody binge everything. That's a humongous disadvantage. They're starting to tinker with that. You're seeing that with Stranger Things being broken up into 2 half seasons straddling the quarters. So maybe he's finally willing to tinker with other things. But he long ago said no advertising. We're a subscription model. And, Hulu makes about $10 a month in advertising. So that's probably about what Netflix could generate. Question is, do they make more money at $10 per subscriber per month advertising, or do they make more money charging $15.49? I think it's a push. When they were only charging $10, maybe it made sense to advertise. I think they can't really pull this off and make any more money. $5, $6 a month plus $10 advertising. That's a push. What's the point?